Fun.
I'm going to kick us off. So, good morning, everybody. Thanks for joining us and welcome. It's the third event in our SME Finance series. This one, the recovery. We never really know what they're going to be called until about a week or two before at the moment, anyway. So, this is quite an optimistic and good title. We're pleased to do. So, I'm Jordan Berg, business manager at SME Finance, and I'll be your host this morning. So for those of you who don't know who SWIG Finance are, I'm going to take this opportunity to let you know. We're the Southwest leading community development financial institution, and our purpose is to generate social, economic, environmental impact through providing loan finance to viable across the Southwest. And as a gap lender, we support SMEs and entrepreneurs who have been unable to secure their requirements through mainstream lenders and banks. So as part of our ongoing SME Finance series, this morning we brought together a new fresh panel of experts from the west of England, and we're going to explore and discuss the current finance market and how SMEs can begin to recover from economic disruption caused by COVID as we start to ease restrictions and navigate out lockdown. So before we look at today's agenda, a small bit of housekeeping for attendees. So our attendees, you're not going to be videos on the screen today, as we've got too many. It would, well, hectic. You are silent and not seen, but that doesn't mean we don't want to hear from you. So please use the Q&A box at the bottom and put your questions through as they come up, and I'll do my best this morning. And I'll also let you know the session's being recorded. So if you'd like a copy of today's webinar, please get in touch with us. Equally, we'll be sharing our social when we upload the video to YouTube in a few days. So today's webinar is in two parts, past and present. So first, we'll reflect over the last quarter, hear about the challenges our panelists have faced within their organisations and communities they serve or engaged with. And then in the second part, we will look forward, share opinions on what might be needed next to support the future growth and recovery of SMEs in all. And at the end of each, there will be a break for so enough from me. A big warm welcome and a thank you to our panelists this morning. I will quickly whiz round an introduction, so if you can nod your head, give it a wave, so our attendees know who's who. So in no particular order, we've got once again, Paul Jones from British Business Bank, Senior Manager, UK Network Team, Southwest. We've got our very own John Peters, Managing Director of SME Finance. We've got Oku Osei from Babasa, who's Chief Executive Officer. We've got Terry Waltondale, Head of Regional Broking at Newable Finance. Simon Crichton, Head of Relationship Management at Trinos. And Angela Apaya Shippey, Director, Corporate Business Services at Bishop Fleming Accountants. So I am going to kick off with Paul Jones from British Business Bank. And Paul, if you could just sort of share any of that British Business Bank insights into sort of how the government-backed lending schemes ended, what happened in those final few weeks, and equally what you've seen so far through the recovery loan scheme rollout.
Thanks for that, and good morning to everybody. The SIBLs and bounce back loans and all the other ills that we've been speaking about all came to a close at the end of March, and we haven't got final figures because the banks have got some time to deal with the last minute request. But just before close, we were looking at just over £75 billion, 46 billion in bounce back loans, and the rest across SIBLs and CL bills, which has helped 1.6 million SMEs to find some funds and to work through their survival. We shouldn't forget, on top of that, there was also the Future Fund, which has helped a lot of high-tech businesses, which has helped over 1,000 with £1.1 billion of funding. So across all that, what we have seen towards the end was a little bit of an uptick, which is no surprise. The terms of SIBLs are slightly more favourable than the new recovery loan scheme, or RLS, because we like to do initials on everything we do. in that it doesn't have the interest-free period and the capital period at the start. So what we've really seen through the early part, through April, May, has been slightly more seeing those CBILS applications work their way through. RLS, you'll see on our website, there's 25 lenders accredited for it. In reality, there's a further 30 or 40 that have been accredited and are just going through some system changes, so they're ready to launch, and they'll join our website over the next few days and weeks, and we're expecting that to rise to around about 90 odd lenders, which is on par with the CBILS. So there's plenty across. If I'm honest, the early feedback I have, and I haven't got numbers because it's too early to do it, has been it's been relatively slow, and I think that's probably recognising two things: one, the surge in CBILS towards the end and the applications, and as we open back out, I think there are quite a few businesses thinking through what's next. One of the things we've had our eye quite close onto is the effect of putting £75 billion into the economy, and which SMEs are going to be able to cope with that and which ones aren't. And hopefully most people are aware now of the pay-as-you-grow scheme, which allows a bounce back loan to be extended out to longer term, so out to 10 years, can also have a further interest-free period and a capital-free period. And each of the lender, wherever the bounce back loan came from, would be able to access that through mostly through online channels, sat with the lenders. One of the things I'd really call out on it, we're getting an indication around about 15%, 15 to 20% will be asking for that. My call would be to actually take some advice and spend some time with some advisors, thinking through, the medium-term recovery plan into growth, and making sure that borrowing is set up as it should be. Beyond that, what we're starting to look more towards now is net zero, getting productivity back into businesses, and really making sure that the lending landscape now is using all of the products, and working tightly with our delivery providers to make sure that businesses are taking the right type of finance for their future growth. I'll stop at that point, George.
Brilliant, thanks for that, Paul. I'm sure there'll be a few questions off the back of that download, and as I say, everybody in attendance, please use the Q&A box to direct those. I'm going to move over to John Peters now. So John, it'd be good to get an update from SWIG, how the end of CBILS has been for you or for us, and what startup activity has been like this quarter.
Sure, Jordan. So, I mean, as sort of Paul was alluding to, there has been a sort of huge late flurry of CBILS applications, which we've been working our way through. So the deadline for applications was end of March, but we have had until the end of May to issue offer letters. So, and there's nothing like a deadline, is there, for sort of galvanizing and stimulating activity. And obviously in this case, there's recognition in the marketplace that actually the CBILS offer is a bit of a once in a lifetime opportunity in terms of the government grant support behind it. Yeah, been very busy working our way through those. We'll be issuing our final offer letters next week. And in the meantime, we've been sort of working with BBB, going through the RLS accreditation process, which we certainly are keen to get cracking on, and hopefully that'll be in place by the end of the month. And in the meantime, we've been dealing with sort of initial inquiries for businesses that might qualify for that. On the startup front, we continue to be extremely busy, as we have been really since last summer. There's an extraordinary amount of new business activity out there, driven by partly people leaving their current employers, setting up on their own, and these are people going into business with a certain amount of relevant skills and experience, and perhaps some of their own capital to invest. But quite clearly they're not carrying the same burden of overheads that their employers were. And at the same time, I think we're seeing a real trend, or have seen a real trend over the last few months, of a lot of retail, food and drink businesses, which are looking to do business in a different way, taking a very creative and flexible approach to the way they're delivering their products and services, which has actually been quite inspiring. So yeah, very exciting time. Obviously, the roadmap out of lockdown is crucial to us all, and very pleased that that's going to plan so far. And yeah, there's a lot of optimism out there.
Great, thanks for that, John. I'm going to move over to Terry Wolfendale. So Terry, Newable, kind of the new kid on the broker block as such in the area. Can you give us a brief outline of the types of finance that you guys support, and share with us kind of some insight into the wider lending market for the last quarter?
Yeah, sure. Thanks, Jordan. No, we are very much the new kid on the broker market, to be fair. We started middle of last year. I should point out, Newable Group has been around for a long time, sort of 40-ish years. But we took the decision to sort of move into, or set up effectively, a brokerage business, as I said, sort of July, August last year. Already we've got sort of 30 plus brokers working up and down the country in the business. So we've accelerated very, very quickly in terms of growing the team. And that's because, although it's obviously been quite a challenging time to set up during that period, we know that SMEs and property investors and property developers are going to need sort of more support than ever going forward. We support SMEs, property investors and developers with every aspect of sort of commercial and property finance. Again, we've sort of been very conscious as we built the business, or in the process of building the business, that we hire brokers from all of those disciplines and backgrounds with experience to handle any of those transactions. What we were quite keen to avoid was just sort of pigeonholing ourselves into one particular area of expertise. So I've got a team now that works right across the sort of funding spectrum, helping, as I say, property investors, developers with the development finance, but buy-to-let funding, SMEs with commercial mortgages. But we've also got a team that's focused on supporting commercial finance. So working capital facilities. We spent a lot of time supporting businesses with their CBILS applications, and still are, like everyone else. But invoice finance, working capital, asset finance are also areas that we've got, a strong experience in, and are helping an increasing number of businesses with. I would say, in terms of what we've seen in the last quarter, for some time now, the property market, and again, generally across all aspects of property, probably with the exception of sort of commercial mortgages, but certainly development, buy-to-let, short-term bridging finance, that's been extremely buoyant and active for quite some time, and that's certainly continued through the first quarter. Things like the stamp duty holiday has obviously had a big impact on sort of driving that activity. So it's very, very active. I will say it's very, very slow in terms of kind of deals moving through that process to completion. It's clogged. So everything's, and all aspects of it are, that obviously the legal stage of a transaction is particularly slow at the moment, but a lot of the other things around planning and etc. are sort of taking a lot longer than usual as well. So it's been very, very active in property, but I have to say sort of painfully slow in terms of seeing those transactions move through. But certainly in the last quarter, what we started to see as well is an uptick in general sort of appetite for commercial finance, which has been really encouraging to see. So as probably a combination of two things, as the CBILS scheme has obviously sort of come to an end, and confidence is gradually to return. We're seeing a lot more demand now for sort of typical kind of working capital type facilities. So invoice finance, asset-based lending, asset finance as well, are all sort of product areas that have been a bit flatter over the last 12 months or so, but are really starting to sort of come back with a vengeance now. And it's businesses kind of moving out of survival and into recovery, which is really encouraging to see. And I want to make sure that they've got the kind of funding in place to support that next phase, that recovery phase.
Yes, and I guess, so the market is dominated by C bills, B bills, but it kind of left a lot of the other funding mechanisms in the dark. So interesting to hear it's back. So yeah, I'm going to go over to Simon. Simon now. So Simon, I mean, Triodos are a bit different from your typical high street bank. So could you share with us sort of the type of businesses you support, the type of lending that you sanction, and kind of what you've seen from your clients or with your clients in the last quarter in comparison to obviously the year that we've all endured?
Yeah, sure. We tend to look to deliver positive impact for people and planet within the organisations we support with our lending. And just to big up the British Business Bank, I'll give some examples from our C-bills lending, because we obviously joined that scheme. We weren't part of BFG before that, so we joined C-bills effectively as a new supporter of the government guarantees. And we've supported things like Neighbourly, which is sort of their IT world in terms of a platform to allow businesses to get their staff volunteering to deliver impact in their communities. In looking at electrification of transport, we've supported Ember, a bus company, an all-electric bus company that's new to market, and really supported them get over the line, whereas they were struggling to get over the line as they hit COVID as they tried to launch. So really got them going. EcoMove in Bristol, so electric mopeds and scooters and the like, because obviously we've got a lovely hilly city, and maybe the old push bike is a bit too much for us all. So a bit of electrification there helps us get around. And then, without C-bills, we've also been involved in the infrastructure to try and, or the start of the infrastructure we need to deliver to allow the electrification of transport, in supporting projects like PodPoint, who are putting electric chargers in supermarkets, so that you can charge your car or vehicle when you get to the supermarket and do your shopping. But it's also things like health and social care. So we supported, thanks to C-bills again, Emmaus Cambridge. So they're supporting homeless. They're a homeless charity where they're supporting not only accommodation, but actually working with the people to really get them back into society and back into the community, because they've been separated from that. And other sectors, we are quite broad. So tourism, arts and culture, those areas where actually arts and culture obviously got some grant support, but quite often they suddenly become on the list of, no, we can't lend because you're out of appetite, because you're completely shut. And so that's just, if you like, supported us get over the line for the projects that we really want to help and go forward with. And of course, let's not forget the CDFIs themselves. So we've provided SWIG with some funding along with some of the other CDFIs, and that really allows us, because we can't, there's no way we can do everything ourselves, and we can't really reach into those real local communities and smaller lending projects that obviously SWIG get on and deliver on. So that's been really important to us. Looking today where we are, it's still really active in the market in terms of our even non-supported lending with guarantee. We're still seeing a lot of inquiries from the normal businesses, if you like, who are performing and have find a way of working. We were one of the first ones to be accredited with recovery, and that was a blessing, possibly or maybe not, because actually we found ourselves on a website with about 14 or 15 other lenders at the time, and to say that we couldn't really cope with the activity and inquiries, and people didn't really read what we were looking for, was a struggle. So we were getting, I think one day we got over 100 inquiries, which for us is tricky. So we've had to sort of that out and get ourselves. So maybe it's not the appetite, it was just the fact that we were one of 15 or so. But it does say that underlying desire is there for the scheme, I suspect. But I would say our focus really within that recovery loan scheme is, it's really important that we get back on track in terms of as we open out. But for us really, and we're trying to re-energize that in the COP26 year, that actually we've got to look to that transition to net zero, and we really are going to push towards getting all of our projects, whether they be environmental or social, to start thinking about that net zero thing and use that as part of the recovery, although it's not in the words of British Business Bank yet. I say yet, but we are definitely looking to push that from our perspective. I'll leave you with that.
Thanks for that, Simon. I think I saw a hand go up from the attendees. If I could just ask you to pop your questions in the Q&A chat at the bottom. Once everybody's spoken, I will bring those in. Great. Yeah, thanks for that, Simon. I'm going to go over to Poku now. So, Poku, Babasa do, a lot of work with disadvantaged communities across. So, I mean, firstly, you give us an overview of Babasa for those who aren't familiar and the sort of project. Also, I think for this debate, it'd be really interesting to see trends that you see across this community in relation to enterprise and access to finance.
Sorry, classic on mute. So my name is Poku, founder and CEO for Babasa, which is a social enterprise. The mission really is to support young people from low income and ethnic minority backgrounds with their professional ambitions. And we do so by supporting them to progress either into the world, well, progress into employment or enterprise startup. We have been going for a while, for about 10 or so years. A team about 21 staff, plus volunteers and what have you. So that is, I guess, broadly what Babasa does. In terms of the challenges and, like you said, the trends that we are seeing, I think we are seeing a significant rise in enterprise, or should I say entrepreneurship and business startups. And I think that is partly as a result of the increase in unemployment, I guess, because, I think it was just last few weeks that The Guardian reported that unemployment amongst sort of the Black population hitting 40%, for example. But also, it's also fair to say that there has been that moment of reflection for all of us, irrespective of race or class, due to the lockdown. And I think people are beginning to think of what is it that they will find more fulfilling. So it's making them inquire a bit more. I think with regards to young people in particular, they've also been forced to engage with technology in a slightly different way. I guess traditionally their technology will be just maybe using a morsel for entertainment, playing games and what have you. But because of the pandemic and them having to do more educational related activities, but also use it as a means of finding out how they can become economically active, means that they've explored it perhaps more than they have, and recognize the opportunities that it presents to become your own boss, so to speak, whether it's even just on YouTube or what have you. But the inquiries that we're having go far, it goes far deeper than just making money on social media, so to speak. But I think it's also fair to say that in most sort of households, ethnic minority households, as we've learned through the pandemic, in particular in Bristol, where we're at, we've seen, if, for example, food banks and food drop-offs are any measures to go by, and we know that that's shot up over 300% in inner city Bristol areas. So I think if you've then faced with survival, because perhaps your parents were doing sort of much more precarious jobs, and young people by default will be doing part-time work, bar work, so they were the first to be sort of laid off anyway, then it means that you start to think of alternatives and go both, one way, sort of two ways, either, potentially. I'm not saying that, they're doing anything illegal, but you can think of that, or you can think of entrepreneurship as a route. In terms of trends from access to finance point of view, I think most families, I guess by naturally coming from low income household, will become just a bit more risk averse to taking on debt, because I guess you just don't have the money coming in. They don't, most of them wouldn't have the credits, to borrow against anyway. But also what we are finding more so as an organization is that, the young people that do engage, many of them have novel ideas, and many of them we're looking to support, but far too often, we do find that they do need just a bit more feasibility, basically a feasibility study to be done, or feasibility support to be done, which, within our confined times, we can't offer and they're, you know, they tend not to be that finance, that sort of free finance or grants necessarily to help them test it before they move on to taking on debt, so to speak. And then the classic issue that, you know, if you come from a low-income household, it's naturally by default, or low-income communities is naturally by default hard for you to have the social capital that is needed, you know, to give you that encouragement, to help you move on. But also maybe you know, you wouldn't have accountants next door for you to check actually how, you know, what do I need to take into consideration when I'm setting up a an organization or a legal person. So you have that inquiry coming a lot to us. And then the last, perhaps but not the least, I think what we were finding was that whilst the demand was increasing and the inquiries were increasing amongst young people to our service, the access and I guess the education and I guess the marketing coming from sort of finance bodies to break, you know, sort of to break it down to demystify the challenges, or should I say demystify some of the thinking around taking debt weren't necessarily coming from, you know, finance bodies within these communities. So I think all that as a mix, it's a mix of opportunity, but actually a lot of it then disguised as the challenge and the trend that is sort of permeating the communities that we do work.
Yeah, thanks for that, Poku. I'm going to move over to you, Angela. So, your clients, for those attending, work within the food and drink sector, and with Bristol boasting, you know, the bustling foodie community that it has, how have businesses in this sector sort of adapted and survived, and what's the general feeling now as we're slowly, you know, being able to go inside to these places again and they're beginning?
Yeah, thanks, Jordan. Well, it's definitely been a sector that's had winners and losers. So, you know, hospitality and indeed leisure has been hit really hard, as we all know, with many venues sort of being shut for months on end. But on the other side, food and drink producers have boomed. We all still need to eat and drink, and if social media is anything to go by, we've all eaten and drunk way too much. So that still happened. But that said, even those businesses that have boomed, I've spoken to a few businesses where they've still had challenges because they've had challenges with their supply chain, for example. So one food manufacturer I was sort of speaking to, he said in the first lockdown, he couldn't get any cardboard boxes because Amazon was buying all the cardboard. So there's all those kind of challenges. Even if you're doing well, you've still got a supply chain that you're sort of part of. So I think pivoting's been really key for sort of all the businesses. So definitely on the food and drink side, I spoke to a local vineyard, and first lockdown, literally she supplied mainly into restaurants and about 10% online. Well, people still wanted to drink her wine, so she just went completely online. So online sales have gone up massively for a lot of the food producers. And I think those that had an online presence already, even if it was small, say 10%, have been able to just scale that up. That's been quite easy to fix. On the hospitality side, you've also seen, as sort of John mentioned, people being creative and flexible. So you've seen a lot of sort of restaurants maybe turn into deli so that they could open as an essential store or turn into a bakery. There's one sort of local sort of brunch place in Bristol which started selling plants, and that was so successful. I've got people down there having coffees. That was so successful that when they opened up in the summer, they kept the plants because they had to do the social distancing. So there was a plant on every other table. So that's been quite positive as well. So I think the general outlook is positive, as we were sort of talking about before the call. You can't get a restaurant in Bristol for love nor money at the moment on a Saturday night. There is so much demand. So there's definitely a sort of positive feeling. And with regard to the food and drink manufacturers, I speak to a lot of small challenger brands, and what they found is there was almost a democratization of how they could get to the consumers, where they might not have had access to consumers before because the bigger brands had them. Some of the bigger brands had more problems with their supply chains, so were running out of stock. So that allowed some of the small brands to be able to sell their products just as well online as some of the bigger brands. And so that's increased their market share. And the thing is, if you've got a good product, once people try it, then people go back to it. So it's actually helped a lot of the sort of smaller businesses gain that market share, which they can now capitalize on. So I think both aspects of the sector sort of are looking positive.
Good to hear. Thanks, Angela. So I've got one question, which I would put to either John or Terry or Simon. It's mainly around the pay-as-you-grow scheme. I think in the communication pay-as-you-grow, it's quite an adverse on your business credit rating. But obviously, there's a feeling that will, because it's showing financial distress. Maybe yourself, Paul, as you've worked directly or as part of this. What would your response be to people being a bit wary to do that as such?
Sorry, was that to me, Jordan, in the end?
Yeah, I was going to put it to all four of you, but I'll just go with you.
No. So I'm aware that the questions come up at once or twice as we've gone along. The reality is that the pay-as-you-grow scheme has been put there as an open scheme to help a business to extend out. I think when a business comes to come back to lend, so if they use pay-as-you-grow and they come back in 12 months or 18 months and want to borrow more money to move forward, then the whole story will be taken into account of where they are as a business and where they're going. And the natural sort of piece that comes from that will be making an assessment of the business and where it moves forward. So I don't see that pay-as-you-grow in itself would be a detriment as a tick on a piece of paper to say there's an issue. It will be more where does the proposition using that scheme, using the cash and taking the advice properly and building the business back into recovery and growth over the period. If it does that piece properly and uses all the funds available through Terry and the other people on the call here, I don't see where it becomes a detriment. It'll be taken on the business at that point. So,
in fact, so I'm going to move forward to the next section now, looking ahead. And yet again, another reminder: any questions, please direct them through the Q&A box. So, as we move forward, recovery has been tipped to be one of the biggest economic booms in a generation. I think Jeff Staley from Barclays was saying since the 40s. What will the challenges in the finance market, or the communities you represent or engage with, be? But also, where are the opportunities, and where do you feel, or what do you feel can be done to, build back Bristol enterprise stronger? And I'm going to start off with John Peters, if you could answer to begin with, and we'll go around.
Well, as you say, Jordan, and obviously it's being well documented and reported at the moment. There is a huge sort of pent-up consumer demand, which we can see coming through now, which presents a huge opportunity for many small businesses to make up for lost time. Obviously we have to recognise that quite a lot of businesses have unfortunately fallen by the wayside, and there are some particular sectors which still continue to face particular challenges, not least the travel industry, for instance. I think what the last year has enabled a lot of businesses to do in this sort of enforced quiet time is to look at pivoting their business models. And looking at how they can deliver their products and services more effectively in a much changed environment, and also think about how they can build back stronger and build back better, which involves looking at their supply chains and quite a lot of the time maybe out of necessity having to look to more local supply chains than they previously did. and looking at the how they can continue to reduce their carbon footprint, which is something that we've done as an organization. Actually, our carbon footprint has gone massively down over the last year, mainly because we're working in this way rather than all driving to an office. And the downside of that is obviously personal communication, face-to-face contact is important, so we wouldn't want to lose that entirely. But I mean, certainly Bristol has an incredible, vibrant small business community, which I think by and large has ridden the storm pretty well. Obviously, the government support schemes have been crucial to enabling that, and but it's also due to the resilience and tenacity and creativity of those businesses and business owners as well. And what we have seen to an extent, I really hope it stays, is more of a sort of return to localism in that you have local businesses looking to more sort of local supply chains and supporting the local communities. And we've seen lots of evidence of businesses actually going the extra mile to provide that extra support to vulnerable members in the community. And I think that sort of loyalty is being rewarded the other way as well, and I really hope to see that continue. I mean, quite clearly a challenge for a lot of businesses is that they've perhaps been able to access government schemes, perhaps bounce back loans quite easily, but going forwards they might not find it so easy to access the funding they need through their bank. And the other side of that also is you'll have businesses who've perhaps been able to access a level of debt fairly easily, which might be perhaps out of their comfort zone in the long term. So, I mean, certainly the pay as you grow scheme, I think, is a really important development, and I can see quite a lot of businesses using that. So, I mean, the important thing, obviously, is that there is the right type of capital available throughout the financial ecosystem for small businesses, not just through the mainstream providers, to ensure there's an adequate flow of capital, so businesses can not only survive but thrive and make the most of the market opportunities ahead of them. And it is important that the ecosystem is joined up, so that the banks are joined up with the alternative providers and the CDFIs, that we actually act as an ecosystem, and that business owners know where to go, which I think is a point that Poku made, is that it's really important that small business owners need to know where to go for support, and that at a certain level there is advice and investment readiness support available.
Great, thank you, John. I'm going to move over to you, Simon, for your perspective.
Yeah, so following on from John there, in terms of, I mean, clearly, right at the beginning of this, it was all about survival. And so, actually, people took bounce back. We weren't part of the bounce back loan scheme. We couldn't have just coped with that sort of level of activity and size of lending. So we just focused on C-bills and supporting what we thought we could legitimately. But so getting the pay-as-you-grow scheme in, I think that's definitely, because that's effectively reflecting on how on earth are we going to pay this back for many. Having gone through that, I've just got to do anything I can to survive initially. So I think that's really helpful and supportful. But I think it's transferring that from that, and I gave a bit away earlier in terms of that, from just survival into the thriving and thriving communities. And so John is absolutely right. It is about doing things differently and trying to build things back differently, given the fact that it is challenging out there for many still, and many still are effectively closed or just trying to find a way to reopening and how they bring staff back in. But trying to do it with an eye to the long-term future of the UK and where we want to be. The UK government has a net zero target of 2050. I'm surprised and delighted that many organisations are signing up to science-based targets and creating net zero targets much sooner than that, because I think they need to support the overall economy. Otherwise, we'll just be in for another difficult ride in the future. And this is an opportunity just to reset, and people have had a bit of time, and we are seeing this, that they've had a bit of time to think about things and just tweak their model. It doesn't, it doesn't have to be perfect right first time and all beautifully created, but just changing small things and moving forward in a steady fashion will be much better done starting now, rather than us all trying to rush to it 10, 20, 30 years later, when it'll probably be too late.
Yeah.
I'll leave it at that.
Great. All right. Thank you, Simon. I'm going to take it over to Poku now. If you could share your thoughts. And I'm muted.
Sorry, apologies. So, just to get my head back into the into the question, this is about Jordan, can you help me with the question again?
Yeah, of course.
Just to make sure that I'm answering the same question.
Yeah, sure. It's just really about as we move forward, as the economy is reopening and business activity increasing, and what just the challenges and the opportunities within the community and the kind of businesses and work with. What would you like to see as we move out? Is it just any thoughts about it more moving?
Yeah. Okay. Yeah. So that was it. And I mean, I'll say that picking on the sort of moving forward, the potential challenges in the finance market, or the communities that we do work with. Maybe I'll keep it short because it's very much related to the first. So just say that, household income in minority communities in general, because that's the communities that we largely work with, have substantially decreased. We know that. Unfortunately, the pandemic has around taking debts increase some more, right? So I think for me on the challenge side, it is then a question of how do you marry the the city or the region's appetite for inclusive growth, inclusive economic growth, and whilst how do you marry that with what from my perspective, and apologies to those on here, what I perceive to be the slightly outdated methodology of using higher interest rate as a means of mitigating the risk of default, when a whole section in this case will be impacted or affected. But having said that, when I look at the opportunities that this brings, I really do think that is in a way, the pandemic has cleaned the slate a bit, and from the point of view that, for one, if we recognize first and foremost that Bristol is really warm, isn't it? The Bristol region, and to a degree the Southwest, really warm to creativity, entrepreneurship, and sort of the tech stuff. And if it is true that we have already taken that first step into the tech revolution, and we know that that revolution has a reputation for, actually still has a reputation for low entry requirements. You don't need chartered this and chartered that, for you to be operating in that space. Then the question is that how can sort of the finance market, so to speak, stimulate young people who are the natural desirable architects. They are the digital natives, isn't it, to help drive sort of the Southwest economy into that fourth industrial revolution. They have the natural disposition anyway. It's a skill that some will say that they, irrespective of your background, of their background, not my background, because I've crossed that page, that they grew up. So how can we invest in their ideas in that field to help drive the economy forward? Because when you think about it that way, then from my point of view, I think then it begins to, we begin to realize that there is a real potential there to raise the income levels and improve the quality of life for places where you have declining social mobility.
Thank you. That's that. Yeah, I'm going to bring it over to you, Paul, now. If you could.
It's quite good, this guessing where you're going to go next, Jordan. So following on from some of those points, really, I think there was a point brought out earlier around startup loans. we're really quite proud that a great deal of our loans actually go out to unemployed people that are working their way back. And since 2012, we've lent 9.7 million to 2,300 loans. And I think Swig, John and Jordan, you've probably done quite a lot of that work in the background, and so a big thank you to that. But it's a real step in the right direction that those loans are going both to our ethnic minority communities, are going to women founders, and going to unemployed to really make a difference in that early stage startup. We've recently done an Ipsos Mori poll, which was 70 odd people across the Southwest, so thanks to some people on here, and that report will be released in the next couple of weeks. And that's calling out that we have a higher 91% say there's gaps in the finance across the Southwest, so we haven't leveled up. We're not that's across our own region, not across the country, which is higher than the UK. The ecosystem works really well for those bigger companies, but is not so great at supporting startups and scale-ups to a degree. And then alternative finance, although we have a good knowledge of it, we've still got 67% saying there's a lack of awareness, and 60% saying there's a lack of difficulty in accessing the supply. So if you put all that together, and just a final point to say that the fintech community of the Southwest is the strongest in the UK, outside of London. So that together, and the fintech here is very particularly purpose driven, as opposed to just finding different ways of lending money. It's helping communities. So we've put together some access to finance, particularly early stage campaigns, which are just starting to run through. So we've done some light stuff, and my colleague Lloyd Brunner, I think, is on the call, who looks after Cornwall. Together we'll be doing a number of events over the next sort of few months, vlogs and blogs and everything else to try and bring that together, but to try and bring that ecosystem together, because we know that the supply is available. We know that there's a fantastic alternative finance supporting the banks, and we know in areas it works really well, and everybody does talk, and we get clusters that work very well. What we need to do is find a way of helping that to work right across the region. And I think my reach out to that, we've seen a really good year in which there's been a lot more inclusion, there's been a lot more thinking. I think we've had time to breathe. I think there's good stuff that's come out of the pandemic, of stopping for a moment and taking our breath. The BLM and those things have made us think about life a little bit different, and there is a step in the right direction. Our networks are building. They're not as strong as they should be. And our Alone Together report last year did actually sort of show the differences between if you're a minority black person to a white business. So that it is an unfair starting point, and we really need to carry on the work we've been doing. And then the net zero piece put across, which you raised, Simon. So I think we have got an ecosystem that has got finance available. It does it in the right way. We have business support. What we need to do is make sure that everybody's accessing that, and that we're passing between ourselves and the ecosystems, collaborating and communicating and including everybody wherever they may sit and whatever their background might be. There's a long way to go, but I really feel that the year has set a foundation, and hopefully we'll now move in the right directions. Definitely I have my support as we go forward for that.
And thank you, Paul. So I will go to Angela next.
Jordan. Okay, so looking at the challenges, I think the first one for me is, there has been a lot of government support, but that's coming to an end. The furlough scheme's coming to an end, and that's coming at a time when people are having to pay back their loans, as everyone's mentioned, but also to pay back some of the VAT. A lot of people have deferred their VAT, for example. So I think this is a time where I think businesses really need to look at their ability to pay back their loans, see whether they need to do the pay as you grow, see whether they need to sort of defer their VAT a bit further. What we've heard from HMRC is actually they're being very supportive, but you just need to talk to them. So don't leave it to the last minute, just give them a call, because they want to see your payment plan, but they're happy to help you with that payment plan. So that's the first challenge I see. The next one has got to be over trading. There's a lot of businesses that are trying to get back up to scratch, and so that some of them could have masses of orders, be profitable, but they just literally run out of cash. and not just cash. They might not have the resource. There's a massive shortage, especially further down in the southwest. I heard someone on BBC yesterday, Michael Caine's, for his new restaurant. There's a massive shortage because of Brexit and COVID. A lot of people that used to work in the hospitality industry have, gone back to Europe or whatever. So there's a massive shortage. There's going to be over trading there, and definitely on the cash sort of point of view. Definitely, companies need to look at their working capital, do cash flows. I mean, I know I'm an accountant, so I would say that, but that is going to be the way that you're going to kind of get through this kind of rocky road. Then just want to mention, obviously the moratorium on commercial rents, that's potentially coming to an end at the end of June. That's going to affect a lot of sort of retail businesses, food and drink businesses. So that's another one. I think a lot of landlords will be supportive. Better to have someone who can pay half the rents or whatever than no one in at all. So, but you've got to talk to your landlord. So those are what I would see as being the challenges. Opportunities we've already talked about. You mentioned, Jordan, Bristol is a very foodie place. People want to go out and spend money on food. And I'm not just saying that for, that's at all levels, that we've got loads of nice restaurants, but we've also got loads of sort of street markets and stuff like that. So, people just want to go out and sort of have food, have drinks. So that's, and also the whole shopping local, which I think John mentioned, that's brilliant for some of our local food producers. And then just with your final bit with regard to what support we can give the businesses to make Bristol sort of better, I think it is just making sure you go out and sort of shop local and support local small businesses. And then, like, one of those basic things, if you're not going to show up, just phone up the restaurant and, let's get rid of no shows. It's something, the margins are going to be so tight for these businesses as they sort of pay back their money, that something as simple as, just phoning up because you don't want to come, they can easily fill someone else. Like I said, there's a lack of supply for restaurants, but yeah, people not showing up is not fair. I'm now so paranoid when I'm 5 minutes late, which I almost have, but I'm trying to phone restaurants just to say, don't give my table away, I'm on my way. So yeah, but that's just me being mindful of the no-shows, sort of working in the business.
Absolutely, brilliant. Thanks, Angela. And finally, Terry.
Yeah, thanks, Jordan. I suppose to start with the opportunity, and I am, I suppose, ever the optimist, but I think that the second half of this year, the recovery is going to gather momentum and gather momentum really, really strongly. And it will be a good environment. And I think across most sectors, if not all sectors, for the next couple of years. So there's huge opportunities for businesses that have either starting up following the pandemic, out of the pandemic, or have survived the pandemic to really push on. And a lot of them have kind of adjusted their business models and cut back excess unnecessary cost and are in good shape to sort of take advantage of that. The biggest challenge, probably unsurprisingly from me, is going to be sort of the awareness and accessibility of funding for these businesses. And probably in all honesty, I experienced this kind of firsthand this week when I went to see a business that has been established for years, like over 100 years, and for most of that time has never needed to borrow a penny from their bankers. And of course, for the last couple of years, not just COVID, but Brexit kind of had quite a big impact on their business as well. It's been rough times, they've been hit quite hard, but they've done brilliantly to sort of still be here and kind of getting back on their feet today. And actually in April kind of turned a profit for the first time in a while. And the future's looking bright. The orders are already starting to sort of build again, and they can see, they're very optimistic about the future themselves. But this is a business that's never borrowed. So kind of suddenly finding themselves in a position where they need cash, and naturally kind of starting with their sort of main bankers to help them find a solution. It wasn't forthcoming. It didn't fit. The bank had done their best to sort of support them through the pandemic with C-bills, etc., but they needed more now, and the bank wasn't the solution for them. And I think we'll see more and more of that. It's gonna, as we come out of this, and businesses that have survived the pandemic are looking to recover and have never needed to go out into the wider market and look for alternative funding solutions before. They kind of started scratching their head, to be honest, wondering where to start. Thankfully, you know, I was sort of put in touch with this business, and it's my opportunity now to sort of find some solutions for them. But what I guess it brought home to me is that when you sort of now potentially businesses are going to be coming to the funding market looking for solutions that have never had to before, and you know, and it can be quite a complex, confusing market for that. There's actually loads of options, but sort of knowing where to start and which ones are right for your business can be a bit daunting to begin with, to be honest. So, you know, that's where we see an opportunity, I suppose, for us in kind of the commercial finance market and the financial advisory market in general, to sort of play our part in making sure that these businesses, sort of new and well established, kind of know what's out there and available to them, and can access it in a timely fashion as well, because you know the recovery, fingers crossed, isn't going to hang about. It's going to gather momentum quickly, as I said at the start. And you know, the last thing that businesses need that have seen an opportunity at long last to get back on their feet is convoluted, drawn out processes and procedures that just delay them getting the cash that they need. So that's the biggest challenge. But you know, has been touched on by other panelists, the really good news is there are plenty of options, there are plenty of funders, there are plenty of solutions out there. It's just making sure that we can kind of join up the borrowers with those options and make sure they're aware of everything that's available to them and deliver it to them quickly.
I tend to think the last year has been a real learning curve for a lot of business owners of lending. You know, like you say, a lot of businesses have never had to look at lending options and never felt they needed it, and now suddenly, you know, they have and are starting to learn, and hopefully, well, from the future through that process. So yeah,
they're a bit reluctant. There's an element of reluctance as well, because you know, they've been in a position sometimes for years where they just haven't had to borrow. You know, but reserves have been depleted, and because they've been in a position where they haven't had to borrow for so long, it can almost feel like needing to borrow is, you know, a negative, or admitting failure, you know, asking for, and there's a little bit of that we need to sort of, you know, help business owners understand that actually there's some really viable options that are there to support growth, and it doesn't mean that your business is in trouble. You know, and you know, quite possibly far more businesses are using these forms of finance than you actually realise, from all sorts of backgrounds.
Yeah. Brilliant. Okay. Well, I'm going to close us off there. Yeah, thanks to everyone that joined us today. I hope you enjoyed the debate. I certainly did. And again, a big thank you to the panel for joining us today. It was a really good, diverse range of sort of perspectives and opinions there. So really great. If you'd like to work closer with SWIG, please do get in touch. Either at info@swigfinance.co.uk, or, you know, my name's Jordan Berg, or SWIG Finance. We're all on LinkedIn, so do contact us directly if you want to work with us in a lending capacity, or equally on events like this in the future. So yeah, thanks again. Have a great rest of your week. Cheers, everybody.